The economy is expected to end on a high note if statistics are anything to go by. Results released by Zimbabwe showed that the economy grew by 9.64% in the third quarter of this year, compared to about 2.2% in the corresponding period last year, sustained by growth in sectors such as agriculture, mining, manufacturing, and tourism. Agriculture remains the backbone of the country's economic growth, as manifested by the record-breaking output in tobacco. The 350 million kilograms of the golden leaf attained this year amounted to sales of more than $1.2 billion, increasing the country's foreign currency circulation. Grain such as wheat and maize, the country recorded some output, which also reduced the dependency on imports, as well as increasing the country's agricultural value chain. The manufacturing industry continues on a growth trajectory, as shown by increased investment by several firms, especially in the fast-moving consumer goods. One of the industrial giants, National Foods, increased their capacity by investing more than $20 million in new product lines. Companies such as Proton and Baker's in the bread-making industry also introduced new lines in a show of confidence in the economy. In the mining sector, the country is expected to earn more than $4 billion from gold exports alone. The country surpassed its 40-ton gold output only in November, showing increased confidence in the mining sector, regardless of softening of prices in other key commodities such as lithium, chrome, as well as platinum group metals. The tourism sector is also on a strong recovery path, as shown by increased figures of tourists coming back to Zimbabwe, leveraging on the improving aviation infrastructure, with one of the leading magazines in the world, the Forbes magazine, adjudging Zimbabwe as one of the favorable destinations for tourism in the world. The year was also significant for the private sector, as the Treasury heeded some of their concerns in order to reduce the cost of doing business. Treasury introduced the reforms in various sectors of the economy in order to slash levies and other related costs in terms of running and also launching businesses. This is huge in order to entrench a private sector-led economy.